Trilogy Metals, trading under the ticker TMQ on the NYSE American, closed the last session at $6.55, marking a notable increase of 3.80%. Now, a single-day pop like that in a junior mining stock might not seem unusual, but what's often missed in the chatter is the source of this movement. It isn't just broad sentiment for copper or a random retail surge. The reality is that institutional trading desks are increasingly modeling the probability of a favorable record of decision for the Ambler Access Project, and their algorithms are reacting to subtle shifts in legal and political communications that most retail investors, even those using sophisticated platforms like the Interactive Brokers Trading Station, simply aren't tracking. This isn't just a bet on metal prices, it's a calculated position on Alaskan infrastructure policy. The common expectation for a company like Trilogy is straightforward. They own a massive, high-grade metals deposit in a stable jurisdiction, and if copper and zinc prices go up, the stock's value should follow. Investors see the published resource estimates for the Arctic and Bornite deposits and think it's a simple waiting game. They might open their Robinhood app, see the potential, and buy a few shares, viewing it as a long-term lottery ticket on the green energy transition, which requires immense amounts of copper. They expect the path from discovery to production to be a clear, if lengthy, process. This view, however, is dangerously incomplete. It overlooks the true linchpin upon which Trilogy's entire future balances, the Ambler Access Project. The deeper reality is that Trilogy isn't just a mining company, it's a logistics and infrastructure play wrapped in a geological lottery ticket. Without that 211-mile industrial access road through the Alaskan wilderness, their vast mineral wealth is, for all practical purposes, just a number on a balance sheet. The real story isn't in the ground, it's in the courtrooms, the boardrooms of native corporations, and the halls of the Department of the Interior. Let's dissect the recent stock movement more closely. That 3.80% climb wasn't an isolated event. Over the past several weeks, TMQ has shown relative strength compared to many of its peers in the junior mining sector. Trading volumes, while still thin compared to a large-cap name, have shown spikes on days with no apparent news. This suggests that larger, more informed players are building positions. This isn't the kind of stock you'd typically find in a robo-advised portfolio like Schwab Intelligent Portfolios, which prioritizes diversification and risk management. This is a high-conviction, speculative asset. When we see this kind of price action, it often points to a re-evaluation of risk. The market is slowly, almost imperceptibly, beginning to price in a higher likelihood of the Ambler Road receiving its final permits. The legal challenges from environmental groups are well known, but what's less discussed is the steadfast support from the Alaska Industrial Development and Export Authority, AIDA, the state-level entity championing the project. The tension between federal environmental reviews and state-level economic drivers is the arena where TMQ's fate will be decided. Investors using SoFi Invest to manage their portfolios should understand this distinction. You aren't just buying exposure to copper, you're buying a piece of a complex public-private partnership. This complex dynamic is further amplified by Trilogy's joint venture with South32, forming Ambler Metals LLC. The expectation is that having a major, well-funded partner de-risks the project significantly, and it does, from a capital perspective. South32 has the deep pockets needed to actually build and operate a world-class mine. The reality, however, is that this partnership also dilutes control and upside. Trilogy is a 50% partner, meaning they share both the costs and the eventual profits. Any analysis of TMQ's future value must be run through the filter of this JV agreement. What are the management fees? How are capital calls structured? Who has the final say on major development decisions? These are the questions that serious investors, perhaps those utilizing the deep research tools available through a Fidelity brokerage account, should be asking. The presence of South32 adds credibility, but it also caps the blue sky potential that attracts many to the junior mining space in the first place. Let's discuss what the company actually is for those less familiar. Trilogy Metals Inc. is an exploration stage company focused on its Upper Kobuk mineral projects in northwestern Alaska. This isn't just some random patch of land. It's one of the world's richest known undeveloped volcanogenic massive sulfide districts. Their two primary assets are the Arctic deposit, which is rich in copper, zinc, lead, gold, and silver, and the Bornite deposit, a significant copper resource. The business model is simple. Prove the resource, get it permitted, and either develop it with a partner or sell the project outright to a major producer. They currently generate no revenue. Their value is purely theoretical, based on the net present value of all future cash flows from a mine that does not yet exist and a road that is not yet built. This is the definition of a high-risk, high-reward investment. Comparing this to buying established, dividend-paying Apple stock is like comparing a venture capital seed round to a treasury bond. The risk profiles are universes apart. The kind of person looking for investment help or a simple way to invest online would be better served by broad market Fidelity ETFs or Fidelity mutual funds than by trying to time the permitting process of a single asset miner. Looking ahead, the future of Trilogy Metals presents a stark binary outcome. The bull case, the scenario where reality wildly exceeds current expectations, hinges on the final approval and construction of the Ambler Access Project. If that road is built, Ambler Metals can proceed with a feasibility study for the Arctic mine, secure project financing, and move towards construction. In this scenario, TMQ's current market capitalization would look absurdly low. The project's economics, even at moderate commodity prices, are robust due to the incredibly high grade of the ore. A positive final investment decision would likely trigger a massive re-rating of the stock, causing a scramble among investors on every platform from Robinhood to sophisticated institutional desks. This is the catalyst everyone is waiting for. Comment below what you think is the biggest hurdle for the Ambler Access Project: political opposition or securing the final funding. Conversely, the bear case is equally severe. If the road is ultimately blocked by legal challenges or a shift in the political climate, the value of the UKMP assets plummets. They would become stranded assets, rich in metal, but with no economic way to get it to market. The company's value would essentially fall to its cash balance, and the stock would be decimated. This is the profound risk that underpins the entire investment thesis. Other risks are more conventional. A sustained downturn in commodity prices could make the project uneconomic even with a road. Geological surprises, metallurgical challenges, or massive cost overruns during construction could erode value. This is why self-investing in a name like this requires a deep understanding of more than just the stop chart. It demands a grasp of environmental law, infrastructure policy, and global commodity cycles. You won't get this level of detail from the basic SoFi trading platform interface. It requires independent work. Even major players like Nvidia stock face headwinds, but they are of a different nature entirely: competition, supply chains, and innovation cycles. For TMQ, the primary risk is singular and existential: the road. In summary, the story of Trilogy Metals is a powerful lesson in looking past the surface-level narrative. The market's expectation is that of a junior miner tied to the fate of copper prices. The reality is that TMQ is a proxy for a single critical infrastructure project in Alaska. The recent 3.80% gain isn't just noise. It's a faint signal that the calculated odds on that project are beginning to shift. Understanding this company means setting aside the simple commodity thesis and instead focusing on the legal filings, the political statements, and the partnership dynamics with South32. The potential is immense, but the primary risk is binary and absolute. For investors in this name, the true value lies not just in the ground beneath the Alaskan tundra, but in the fine print of permits and the political will to see a vital access corridor built. This is for education and entertainment only. Invest at your own risk. Comment, like, and follow for more.